We are back with another edition of YouTube Live, guys. Is the market in Phoenix at a tipping point? I think some people say it is, and the data would suggest that we're just not sure. But we put that in here because this week, I think it's week 32 of the year, is a week that sometimes can be a little pivotal. Now, we're going to jump into data and kind of explain what that means. But what is going on with the housing market? Is it a good time to buy? Is it not a good time to buy or sell? Either way, is there a window of opportunity for potentially both sides right now before maybe this thing coming up here towards the end of the year called a presidential election? We'll see. But thank you for joining us here today on YouTube Live. We're going to dive right in and get talking about some of the data analytics for the housing market for Phoenix. What is happening right now? And of course, is it balanced? Is it seller's market, buyer's market? All that stuff we will cover here today. And even though we have some technology issues and I'm using a backup webcam, we're going to move forward and have a great show, okay? We're going to jump into some development, guys. There is a crazy amount of development happening here in the Phoenix area. And it continues to foot on the gas, full speed ahead, downshifting into third gear, back up to fifth. It is unbelievable what's happening. And also what's going on with rates. What does this all mean for the future as we head towards the back half of 2024 in Phoenix? Well, I'm glad you asked. We're going to jump right in. But first, we need to check with the Cromford Market Index and kind of see what's going on right now with everything that we're talking about with balance and supply and demand and everything else in the housing market, guys. Well, here we go. You look at the market index, and you can see that we're at 99.7. So we, again, are right smack dab in a balanced market here with respect to supply and demand here in the Phoenix area. Now, you can see supply is lower. We do not have an oversupply. So you'd say, well, that's pretty good, right? Yeah, that's why it's green. But look at demand. Demand is low too. Unusually low. And typically it's not this low in Phoenix this time of year, or for the whole year combined, that is. Guys, we talked about in June, the market actually had a contract ratio of in the 40s on June 1st, and typically around June 1st, because the summer hasn't taken stride yet. People are still looking for houses. School just got out. We were at a contract ratio in the 40s, and typically we're in the 70s or low 70s in a decent year. So this is where we stand right now. What's going to happen? What's the best way to play out the rest of this year here in 2024? Well, let's just go over here and talk about this screen here. You have right now in the Cromford report, you have the Cromford Market Index. Where are the suburbs at? I'm going to show you right now because it's very important. It's a micro market in every single city. Phoenix is no different. And so you have right here, Fountain Hills leading the way. Chandler has continued to slide. And what's interesting, with Intel laying off 15% of their workforce, being the fact that the headquarters are located in Chandler, does that have something to do with this situation right now? I think it probably does. This is not good. Now, I don't think it's everything to do with that because it takes a while to flow through to the housing market potentially. But Chandler was leading the way for so long that now it just had to come down. All good things that go up must come back down, and Chandler is doing that right now. It has to be more affordable. It was getting a little too crazy there for a second because it kept going up and up and up. Chandler kept overperforming every single month or week, in fact, that we were looking at this. So there you go right now, and you can see that the higher end places like Scottsdale and PV are green. That's interesting, and we're still in the heat of the summer. So what does that mean? Well, it's hard to tell. Honestly, it's hard to tell. But the one thing we know is that the people in Scottsdale and PV, some buyers obviously, aren't as interest rate dependent. And so maybe that obviously continues to go up. And I think it's going to probably go up into the fall of 2024 because the weather gets nicer, and that's when the higher end shines even brighter as opposed to the summertime. So we'll keep an eye on that. Now look at Buckeye down at the bottom, 64.5. That is clearly a buyer's market, guys. If you are looking to invest, it is a good time to do it. Now, how much lower could it go? Who knows? But don't try to time the bottom because you don't know you're in the bottom until you're out of the bottom. And with rates doing what they might do here in a month, we'll see what happens. But let's cover that right now, okay? Before I go there, I want to cover the contract ratios. Guys, you can see right now the contract ratios, and here's the graph of that, right? The contract ratios here in week 32 is at 41.4. Again, in the 40s as about it was in June. And you can see it peaked earlier this year in April, which is about right at 55.6, but it never got that high this year. Why? Because of rates and buyer fatigue, interest rate fatigue. People are waiting for these rates to come down a little bit to give a reprieve, and it's just not happening until last week. Okay. And it kind of did. So that's where we're standing right now. And you can see where the crazy years of 21, 22, those were just not normal years. And so those peaked up there. But let's go back to 2019. 2019, you also saw that, 2019, it peaked in week 34. I thought it was going to be in April again, but it wasn't. In 2018, it was. Here is April. But you actually had a peak in August of 2019. Interesting. The market was doing pretty good. We didn't have crazy low interest rates, but we had good, low, solid interest rates for people to buy and a good balanced market overall back in 2019. Okay. Now, fast forward, you can see where we're at right now. So, what will be the trend as we head towards December? Well, if you look at the trend for the rest of the years on this map, it is easy to see that as you head towards December, that the contract ratios continue to stay fairly low. All right. That brings an opportunity up to anyone looking to buy. So, what's going on with rates? Let's take a look, guys. Here's the 30-year fixed. You can see right now that it was down to, my goodness, look at this drop right here, 575. Hello. And then it bounced back up in the low sixes. So, guys, that is a low rate. It's the lowest it's been in an entire year. So, if you're looking to buy, this could be a good time to lock. Now, obviously, it could come down lower. We don't know. But here's what we do know, guys. We do know that the markets and the smart money out there is really saying that the Fed should have cut 25 basis points in July. They did not. Now, I know the Fed doesn't like to surprise anybody. That's what they say, at least. And so they kept it the way it was because the markets didn't have time to react to a potential Fed decrease of the federal funds rate of 25 basis points, which is a quarter point. However, what the Fed wants is a soft landing. And right now, it's looking like, because people are stating that this needs to happen, the smart money, the unemployment rate came out at 4.3%, which was the highest it's been in 3 years, that now everyone's saying the Fed might be behind and trail this a little bit. Well, that's what they don't want to do. So now the markets are stating that they think in September, when the Fed meets, the Fed's going to cut 50 basis points, a half point on the federal funds rate, which is not the norm. When there is a Fed cut of the rate or an increase, typically the majority of the time is 25 basis points. Now, obviously, when they stepped this up to try to combat inflation back in 22, they did increase, I think one time, 75 basis points, which is like unprecedented to an extent. So they can go more than that. It's just somewhat rare. So that's where rates stand right now. They're down in low sixes, which is awesome compared to the sevens and high sixes and even mid sevens we've seen for the past couple of years. So that's what it stands for now. Let's go to the 15-year. If you want to see right now, the 15-year is currently at 6.07, and it was as low as 5.89. So trending along the same lines. And again, for those of you who don't know, that the mortgage rates, the 30-year fixed, mortgage rates in general, just follow the 10-year Treasury note. Okay, so they don't follow the federal funds rate. They have an indirect effect when the Fed drops or raises because it kind of follows it to an extent, given the overall economic picture. But rates follow the 10-year Treasury, not the federal funds rate, which is the overnight borrowing rate between banks, et cetera, et cetera. So let's go back to our graph here. Now let's talk about Mortgage News Daily because this is interesting. It says mortgage rates finally end this week's losing streak. All right, this was last Friday, and it talked about that. It finally went down, and it's now settled in, okay? So you're starting to see the settle in of the low sixes. And I think, guys, that the Federal Reserve, meets in September. I would not be surprised if you have more of the same until September, right? You're in the low sixes. It's picked up a little bit in most marketplaces. So do they just keep it the same because they know if this is built in September, that could have a jolt right then, but we'll see what consumer confidence does. Okay. So this is a bunch of, I feel like I'm rambling here a lot about rates because the reality is nobody knows. And the reality is you don't know how low they're going to drop. And I think here's the point of this whole entire YouTube live right here. If you get nothing out of this live but this, then please understand. This is my opinion, okay? That I do think there's a window, a small window between now and the election, okay? Because I know historically, we know that 8 out of the last 11 presidential elections, no matter who got elected, the housing market went up the following year, okay? That's interesting. But I think right now there's so much going on with political divide and just things and printing money and all inflation that right now it's pretty certain that we believe the Fed is going to do something with the federal fund rate and is going to lower the rates, maybe even as much as 50 basis points. What will that do for consumer confidence? It will do a lot. And if it does, and the 30-year fix reacts or 10-year treasury reacts even more to that drop, then there's a scenario here, guys, where the 30-year fix could drop into the fives, obviously, and potentially even mid fives, potentially. If that happens, we know in Phoenix, cannot speak for the rest of the world, or the country, I should say, but we know for Phoenix, that will bring a lot of people off the fence and they will move. Okay. We know that to be true. So if that is true, then I think there's a small window between now and maybe not even the election, maybe September, October, where you can get in on a house at rates that are decent, historically speaking, over the past year or two or three, right, at low sixes, and have full negotiation leverage on what you're going to buy to get the best terms possible for your property. That is a scenario right now. So it's curious to see how it's going to play out, obviously, but there is potentially that window. And then come when the consumer confidence rises and when more people jump off the fence into the housing market, potentially, you may have some more competition because they can't just build houses overnight. Now, they're trying to build houses quickly. There's homes going up almost everywhere on the outskirts of the valley here in Phoenix. However, they take a while. We all know that, right? And a supply demand is still undersupplied by a lot, guys, here in Phoenix. In fact, next week, I will have that number for you in terms of what the undersupply is forecasted at for Phoenix alone in terms of housing supply in the market, okay? But let's go back to the screen here, guys, because Yahoo Finance has a lot of interesting stuff. And they have one here, the stock market today. U.S. stocks waver ahead of key signals on inflation and the economy. So what's happening this week is that there are going to be several reports that are going to come out this week, economic reports on the inflation index. And several big companies are going to report earnings. But the consumer price index is happening this week, okay? And then July's retail sales are coming out this week as well. So a lot more is going to happen, guys. If there are slow retail sales numbers and if the CPI is not going the down direction, but it is going up, if it stays flat, that'll be interesting to see what that does to the economy, just to be honest. But if not, we will see what will happen. And guys, if these things are both trending in the wrong way, I think you're going to see potentially the 30-year fix, even though the federal funds does nothing to the rate because they can't until September when they meet again. I could see the Treasury, 10-year Treasury move, and therefore rates move even lower potentially by the end of this week. However, what's intriguing to all this, guys, is the stock market. I know this is a real estate show, but and I'm not a stock market expert by any stretch of imagination, but the stock market continues to go back up. You would think that with the news and everything, maybe that would have settled down. I know we had one bad day or two there, but it is resilient. It came right back up, the S&P 500, then NASDAQ, et cetera. So we'll see what happens there, guys. Now let's jump into some more real estate stuff because that's what I truly enjoy, okay? Let's go back over here to the Crawford report because we have some other cool data points to hit on. This is the listing success rate by calendar month. Okay, look where we're at right now, guys. We are in August. We're at 64%. Typically, the year bottoms out in December, and that's at 61% last year. We're at 64% already. That means out of all the listings on the market, 64% of them are actually selling. That's not bad. I mean, look at 2008. Holy cow, 21% in 2009, 2008. That is insane. All right, and then, of course, we had a big jump up because the first-time homebuyer tax credit in 2009, 2010, where the government threw money at some people to buy houses, and therefore it spurred some activity, and then it went back down when the home buyer credit exhausted itself, and then it kind of went back up after that because the market started to turn. Okay, so you can see right now that every single downtrodden year or part of the year is usually the end of the year. There's December, January, December, November 14, and so on and so forth. So right now we're at 64%. This is a low even last year. But guys, I think here's the thing. I think the takeaway from this graph is that if rates come down a little bit further and it has a 5 in front of it, you're going to start seeing the low for December maybe be around 67, 66, 68. Well, Kelly's already 64. Exactly. So I can see that it coming back up potentially towards the end of the year if rates get to be a little bit better and the low end up being right about now, sometime in August. We'll see what happens, but something to keep an eye on, and we will keep an eye on this for you. All right, this is interesting. Seasonal trends. We are coming out of summer here pretty soon. Seasonal trends, close sales by calendar month. You guys, you can see right here that August has a decent amount of closings overall in Maricopa County. But it goes down in September, October, and November, and then it comes back up in December. That's what's been happening lately. Okay. So you can see kind of the seasonal trend of what happens here in Phoenix. Now let's go to this graph here, which is new listings by calendar month. This is also a seasonal trend. You can see new listings is very low in December. Why? Because everyone waits to January. Guys, look at that. January. And then the people who aren't ready around the holidays wait till March because spring training and the weather is just absolutely perfect and everybody's coming down to Scottsdale and Phoenix to golf and have a good time. And then it kind of peters out from there, right? And then October, it's interesting, right? More listings, more inventory in October because people are back in the swing of things. They're getting the houses ready after the summer vacations and they're putting the houses on the market in October. They're going to hopefully selling them before Christmas. That's how it works here in Phoenix. All right. Last graph to show you on this, okay? Sales month to date. You can see 2024 is not a banner year by any stretch of the imagination. Guys, look at this. Compared to 23, 22, 21, 20, 19, etc. It is not that good. And you can see the day, the weekday of close date. That's interesting, right? But anyways, that's just a color chart, kind of cool. But sales month to date, it has not spiked yet due to the interest rates coming down from about 7 down to 6.2, 6.3. However, with the rates settling back in, there probably won't be a spike in Phoenix here until rates come down a little bit further. Okay, so here we go, guys. Some more economic news. I want to show you this, guys, on Yahoo Finance, not finance. Okay, here we go. Look at all the articles. It's about rates. Refine. What are rates doing? Refine. Skittish buyers. 30-year mortgage falls to its lowest rate. Mortgage rates plunge to the lowest level since May of 23. Blah, blah, blah. Okay, guys, that is the big story. It was last week. Now, this article is interesting here because it talks about mortgage rates dropping, which lures skittish buyers back to the housing market, guys. And this is what we're talking about when it comes to competition with looking to buy a house. All right, this article is interesting because the popular 30-year fixed mortgage rate is near its lowest levels in months at 6.58% after a weaker than expected jobs report. And then you have recession fears, and you have retail sales being reported this week. You have the CPI report coming out this week. So this will be a very important week as well, piggybacking off last week. Okay. The median sell price in America is $389,750 during the 4 weeks ended August 4th, more than $6,000 below early July's all-time highs. Why? Because this is not just Phoenix. This is national, and other areas of the country is actually bearable with the weather, and so people actually do conduct business. Okay. And then here's a quote. Many of the buyers I'm working with are excited because they've been casually house hunting for a year, waiting for rates to come down. Buyer fatigue, rate fatigue, before they make an offer. Now, a lot of those buyers want to get in before rates get too low and cause more competition. There you go. And that's the essence of my entire monologue here, right? All right, let's go back to some development stuff, guys, because there's some crazy stuff happening here in Phoenix. I mean, not crazy like, oh my goodness, this is like, earth-shattering, but a lot is happening, guys. And when you have a lot of development happening, you're talking about people that need to run all these things, from the construction of the building that needs to be built to the business that occupies the building after it's built and everything in between. And that means jobs, and that means population growth. And so when people come for jobs and population growth, they have to have a place to live. That's right. You guessed it. So that's what the housing market, I think, in the short term could turn down a little bit. It's very possible, but it probably won't stay down for that long. All right, here we go. A couple articles. Buckeye considers approval of these 3 major industrial projects. Okay. There's proposing a 400,000 square foot commerce park in the West Valley. 400,000 square feet, a big commerce park, guys. This is huge. And you can see articles. We won't go into all these articles. We won't talk about all the details because it could be a little boring. But what I'm going to show you is a lot of articles on all the different manufacturers and development projects that are happening throughout the Phoenix area. Packaging manufacturer acquires large site next to Kohler Company. All right. A Wisconsin corrugated container manufacturer made a big play in Arizona with the acquisition of a prime industrial site south of Phoenix next to Kohler. Okay. 80 acres of land. All right. Out in Casa Grande in Pinal County. Casa Grande housing market will be doing well in the future. When I say future, I don't mean like maybe next year, but give it 5, 10, 15 years. Oh my goodness, Casa Grande will probably be a lot. I wouldn't be surprised if values were doubled. Now, granted, you got to wait a while. What's your exit strategy? That's what you have to ask yourself. Here we go. White House to dole out CHIPS Act grant disbursements by the end of the year. And there's the TSMC. And we all know that Phoenix is one of 5 cities that actually the White House dubbed as a manufacturing hub to take America into the 21st century of chips manufacturing and technology manufacturing. And so they are putting out a lot of money to those 5 cities, and Phoenix is one of them. So that is a good thing for all of our local economy, for all the jobs and everything that, especially TSMC as the flagship manufacturing newest company that's coming to the Phoenix area. And of course, you have Intel. Can't forget about Intel. Their corporate headquarters are located here in Phoenix in the Chandler area as well. Okay. So a lot of money coming here from the government, and it's crazy. $162 million, okay, was set aside by the White House for chip manufacturing. Holy cow, that's a lot. All right, next. The Great Migration is largely over, done in by 2 economic developments. Well, that's interesting. Guys, this is not rocket science. This is interesting, right? Where is the population going? And all this is basically saying is that a lot of the population that was going to the major places during COVID has slowed down a little bit. Still going there, but slowed down a little bit. And also it says that the big areas that lost the most population, like San Francisco, Chicago, New York City, etc., still has not replenished that population loss. Boston's another one, right? They saw declines. They continue to see declines in the second quarter of this year, according to Bank of America's research. So this is interesting, guys. And a lot of people are going to smaller towns in places where they are having free enterprise as well, is what they're saying. Okay. So the next one. Downtown Phoenix residential tower hits a milestone plus other Valley deals to know. Now, we're not going to go other Valley deals and go into all these, but guys, this is a new huge tower in downtown Phoenix. Downtown Phoenix is spread out. It doesn't have a ton of huge towers, but it has several, and it's going to have another one now on Central Avenue. So that's pretty cool for the skyline of Phoenix. Okay. Next, a $20 billion data center campus gets green light in Buckeye. 20 billion with a B. Denver developer finalizes plans to acquire 2,000 acres from West Valley landowner. Guys, this is interesting because did you know that Phoenix actually is one of the largest cities in all America to house these data centers? Facebook, Google, and the list goes on of all these data centers housing major, needing thousands of square feet, tens and hundreds of thousands of square feet to house their data centers. So that is happening a lot. Why? Because Phoenix is leading the country when it comes to industrial manufacturing and available square footage of industrial space, which is exactly what these data centers need. And again, it's cheaper than it is at places on the coast, the West Coast, East Coast, etc. So Phoenix is a prime place for all this industrial growth throughout the valley, which is bringing more and more jobs to us. So this is good stuff, guys. This is very good stuff for our local economy. Okay. And so I'm just showing you there's the parcel land, which is right next to the Buckeye Municipal Airport, just south of the I-10 in the West Valley. And this is going to be 2,000 construction jobs and an estimated 500 full-time jobs. Guys, the jobs in Arizona continue to go up and up and up and increase. All right, next. Prasada Shopping Complex in Surprise, a hit with retailers, more growth expected, guys. So here we go. Now we're in Surprise in the Northwest Valley, and retail is booming. Yes, retail. The thing where people walk into a store and you actually buy something and you grab it like right then, tangibly, and you hold it and you walk out in a bag and to your car and you go home. That's retail. I know it's crazy, but Phoenix is doing great for retail, and Surprise is benefiting as well from their shopping center, guys. So, guys, whoever said retail is dead, maybe for a while in COVID it was, but it is coming back, especially in a big way in Phoenix. Okay. So this gentleman here is one of the brokers there. It looks like CEO of the Simon Commercial Real Estate. All right, and then big development. A lot of retail is coming in, and they are succeeding at a high level. 10 million visitors expected in the next year. Wow, that's a lot. All right, next. If you haven't believed me just yet, Some more development, guys. A new $70 million hospital to be built on Mayo Clinic Phoenix campus. Guys, the Mayo Clinic is already state of the art, well known across America, and now they're expanding. This is wild, guys. There's a rendering of the new hospital to be built on the Mayo Clinic Hospital campus in North Phoenix, which is on the border of Phoenix and Scottsdale. Okay. Jacksonville, Florida-based Brooks Rehabilitation is making its Arizona debut with the construction of a new hospital at Mayo Clinic's North Phoenix campus. Its first expansion outside of Florida is this one in Arizona. Okay. It's just crazy, guys. So here's the plot of land to give you an idea. It's a 228 parcel that they're building on. So you can see right here, Discovery Oasis, which is going to be bananas. I reported on this a lot of research and medical research and healthcare right there. And ASU will have a big part of that as well, Arizona State University. And then you have the Mayo Hospital right here. And then the campus. Then you have ASU Future Center. And then over here, the Brooks Rehabilitation Hospital. Guys, you can see on this plot of land by this map, there is still a lot more room in this little area to build even other things. So this area, North Phoenix, just south of 101, the 101 is right here, guys, is absolutely exploding. Absolutely exploding. And there's a little zoom in of that. Okay, that is wild. So good kudos for the healthcare industry in Phoenix because a lot of people are retiring and we are aging out in our population here. So continue to have retirees and snowbirds, but also younger people move down to the Phoenix area. All right, here we go, guys. Last but not least, we're going to end on this, okay? If I haven't convinced you enough already that Phoenix is, just a hotbed for development, guys. I mean, look at all the things that every single week or day, when I open up the Phoenix Business Journal, they're having new articles about a new business, a new industrial warehouse, a new company bringing their division or headquarters to Phoenix. It is wild, guys. And again, this brings spurs economic development and it brings about jobs. And a lot of these companies and sectors, technology, semiconductors, et cetera, are high-paying jobs. So, guys, what does that mean for the housing market? Well, we're going to go back to this article here and give you a little opinion on what this person says. Why home buyers should check their expectations. Okay, this is good because you always have to see both sides of this. Don't get all in a frenzy and say, well, because a realtor said or a real estate professional said that I need to go buy, go buy. No. Do your own research. Talk to your advisors, your right people, make the most informed decision, but don't just go off talking heads on a national level, especially in the media. Okay, here we go. This guy brings up some good points. Home buyers urged to temper expectations. Okay, rates are never going to go back to where they were during the pandemics. And Marty Green, principal at law firm Polinsky Vital Green. I think getting into the 4 to 5% rates is definitely in the cards over the next 18 months or so, but not 2 to 3%. Okay. Why it matters. The kind of reduction, would mean hundreds of dollars saved each month compared to today's rates, which sit near 7%. Okay. And then the NAR chief economist, Lawrence Yun, thinks that mortgage rates will settle at closer to 6%, not in the 5s or even the high 4s. Okay. Then you need a counterbalance. That's very true. Okay. Then you had the CrowdStrike outage. Yep, we got that going on. You have the chip-making giant to lay off 15% of its workforce, which is Intel. That's national news, of course, right? Even though it's located right here in Phoenix. And then you have Spirit adds travel classes with premium options. Okay, that's interesting. So you have all these things going on, guys, in the economic world. But the reality is that even as rates come down, I love this counterbalance point. A glut of buyers, a reduction would bring to a market that's currently short of inventory, would push the cost of homes higher, limiting the savings from lower rates. And that is the bottom line. If you don't believe me, believe the Phoenix Business Journal because they have research on this as well, that it has to come down slowly. That soft landing has to happen. We cannot go right to 4%, 4.5%, 5% even in a month or 2 or 3. It has to be stepped down slowly so that the market can absorb, hopefully, over time and equally all the additional buyer demand that will come about from lower rates. Because what you don't want is a tidal wave of buyers coming to the market. And then, of course, that causing bidding wars again because we don't have enough supply to accommodate that. Now, we will eventually, but it takes a little bit of time. All right, guys, that is the show for today. And the market's a little tipsy. Which way it's going to go for the rest of the year here, heading into 2024, I should say quarter four coming up here pretty soon. We're still in quarter three, obviously, at this time. But take the data and make a decision. Don't just wait, guys. You have to get in the game at some point. And if you're waiting forever, you just will be constantly waiting, guys. I talked to 2 people over the past like 3 weeks here, just randomly, that are still renting and have waited since 2020 when they first thought, and someone told them, "Don't buy now. The sky is falling." And then we had that V bounce back recovery post COVID, and they're still waiting. Don't do that. They missed out on a lot of equity because they didn't get in the game. If your exit strategy is long enough, 5 years or more, 3 years or more, okay, etc., then it's probably a very good argument I would make to get in the game, the homeownership game, because we know the differences between net worth of homeowners and net worth of renters, and it's not even close. All right, call me with any questions, guys. I would love to chat with you at 480-660-5974. Otherwise, until next Monday, keep it classy, Phoenix.